Chris.moreno, Chris.moreno, and Conrad Moreno. Chris
Conrad.
Moreno and
Olvera.
Conrad Olvera. We are live now. So today's topic, you guys, we have our branch managers here. Super awesome. Branch manager Chris Moreno and Conrad Alvera. So Chris and Conrad, today's topic, we'll be talking about buy a home in today's market. As you know, the market is crazy, right? Multiple offers, and you guys are helping clients. Can you share from real life stories how you help consumers in today's market to win?
Yes, of course, of course. I'll let Conrad kind of start off with a few things that we kind of help people take advantage of. So go ahead and go for it, Conrad.
Yeah, hello everybody. There's a lot of different strategies that we use to help buyers get their offers approved. Obviously right now it's very, very competitive. You know, there's very limited inventory out there, and there's a lot of buyers out there. There's more buyers than there is inventory. So it's very competitive in all of Southern California and Northern California as well. Some of the items that we do is we do offer a per diem to the sellers. So you know, if we write up an offer to close in 21, 25, or 30 days, we do offer a per diem, whether it's $100 or $200 a day. Any day after that we close, let's say it takes us 3 days after to close and it's $100 per day, we will give your seller $300. So it's more enticing to get our offer accepted, because that means it shows that we mean business as far as getting closed when we say we're going to get closed. We also lower contingencies.
Oh, well, hold on, Conrad. I want to make sure people understand what you are saying. Do you guys understand what you are saying? So, Conrad, you are so confident. So, if you said you're going to close in X amount of days, you are telling the owner of the house, the seller, hey, sellers, if I fail to perform, if I say I'm going to close in X amount of days, and if I don't close, I will pay per diem. Means it's kind of like a penalty, right? You are saying, hey, if I say I'm going to close on Monday and I close on Friday, then every day I'm going to pay you like $100 a day, for example.
Exactly. Guaranteed or your money back, right? We're going to close when we say we're going to close, or we're going to give you money. So that's enticing. You know, if we're selling something and we're not sure if that person's going to close, but they offer to pay me, I'm probably going to like that offer a little bit more, because essentially they're guaranteeing that it's going to close. So that's something that we do. We also lower contingencies when it comes to loan approval. We either lower it very short amount of time, whether it's 10, 12 days. Sometimes we even remove it altogether. You know, we do get an underwriter approval prior to, so that way, you know, we're able to submit an offer with loan approval already. You know, before we even got into escrow, the loan is approved. Income and credits checked by an underwriter, we're good to go. So we don't even need a loan contingency. All we need is a home inspection and the appraisal contingency. So those are a couple of the items that we're doing.
That's so good, Conrad. Man, do you guys understand? Do you guys understand what Conrad is talking about? Imagine if you are buying a house, right, and you get an approval from ABC Mortgage Company, ABC Bank. If you read at the bottom, if you read at the bottom of the letter, it says this approval is subject to the underwriter's approval. Conrad, can you speak a little bit more deeper on what you just touched? Because if I'm a first-time home buyer, I wouldn't know what you're talking about, because my agent told me that I already have an approval from ABC Mortgage Company, and I submit my offers competing against 20 others multiple offers, and I wonder why I'm scratching my back, why my offer never get accepted.
Yeah, you want to elaborate on that, Chris?
Yeah, so essentially, like you mentioned, today's market, there's 20, 30 offers out on a property. So essentially, when you have no loan contingency, you're able to buy the house and say, listen, I'm not worrying about my loan. My loan is ready to go. I don't need to have that default contingency. What a lot of people don't realize is you have your contingency periods that are default to the contract. So if you have your normal contingency periods as a buyer and you've been submitting offers like crazy and not getting anything accepted, one of the reasons might be is that the contract states, hey, I have 17 days, seller, to perform and make sure my loan is approved. Okay, so you're really not that serious, you know, if you need 17 days to make sure you got a loan. So what Conrad's talking about is if we've got a buyer that's given us everything, we've ordered some verifications of employment, we've done all that legwork up front like we want to be a more competitive buyer in today's market, we're going to be able to submit an offer. And instead of saying 17 days like most of those other buyers do on their contracts given to the seller, we're going to say 0 days. Day one, we're giving you an offer and saying, listen, I am not having to worry about my loan. My loan is set. I'm ready to go. All I need to do is make sure that my appraisal comes in and that the home inspection comes in. So very, very powerful tool. We call them TBD approvals, to be determined. Loan is already approved. All we need to do is plug in an address in there, but the borrower is already set and we don't need 17 days like most of those buyers need.
That is insane, you guys. That's powerful, Chris and Conrad. So for our VIP buyers clients, Chris, this is what we are telling them. Hey, if you become our VIP buyers clients, this is what Chris and Conrad and his team, what they're going to do is this. Imagine if you are imagine if you are the sellers of the house. I know you are the buyers, but let's pretend for a moment that you are the sellers and you have multiple offers on your home. Let's say you have 15, 20 offers, which is normal in today's market now. Right? And then assuming everything being the same, like the price is equal, 500,000, but one is subject to financing, and one, the financing is already guaranteed by the lenders, which offer will you accept? Do you understand what Chris and Conrad is saying? What Chris and Conrad is saying, we're gonna turn you from buyers A to buyers B, so your offer is no longer subject to financing. But Chris, we want to be transparent here. You said, I catch you, you said this, if we have all the documents ready. Can you go in details? Because I don't want the consumers to have false expectation, right? They go to you, Chris, and they give you like their driver's license and they expect you to be able to remove all contingency. Can you go a little bit more so that way the expectation is level on the same playing field?
Exactly. So when everybody needs a pre-approval, we need a certain amount of items. Typically, it's about 5 or 6 important items: taxes, W-2s, pay stubs, driver's license. Then we run credit, right? The two main reasons why deals might fall out of escrow normally is income is calculated incorrectly, and/or something wasn't caught with the credit. So what we tell our clients, just like I mentioned right now, is in order to get a TBD approval, we want to have all that pertinent and necessary information that maybe some buyers aren't always giving. Maybe they give us just, 1 year's taxes and 1 year's W-2. They didn't give us both years. The more documents a buyer can give us up front, the better equipped that we are to give a TBD approval. And the number one thing that can help us get a TBD approval to make you in turn a stronger buyer is getting that verification of employment. That's one of the most important things right now, especially during COVID times. We're having to contact maybe an HR that's not working in the office 5 days a week. Some of the big employers, they have these automated systems where we can get, verifications of employment through these automated programs. Worst case scenario, if the client can get pay stubs for the year end of each year that they've worked at their company, that will help us break down the income. So the number one thing that we need for a TBD approval, help us get the verification of employment, which breaks down the 2-year average of what the client is making. That way, typically, remember, people don't order a VOE until you're in escrow. Let's do all that legwork up front to make people a better equipped buyer, to be able to close quicker and to be able to submit offers with TBD approvals. That way, you're getting more accepted offers. So, we do need that involvement from the buyer to get us the things in a timely manner, because if they get us everything, we can move as quick as the buyer does.
That is powerful. What's next? What can you guys do to help the consumers in today's crazy market?
Well, to kind of add to what Chris was saying before we move on, Rudy, another important document is if a buyer was divorced, a divorce decree is important because sometimes there's surprises on divorce decrees. Maybe one of the spouses is paying child support or paying alimony. Sometimes buyers forget to disclose that to us up front. So when we are getting these TBD approvals, those divorce decrees, we like to get them up front just to make sure there's no surprises. So that's another additional document that we would request. Sometimes lenders wait till they're in escrow to request that divorce decree, but it's very, very important in today's market to be able to get that up front. And I know sometimes it's a hassle, as a buyer, like, oh, I'm divorced. I don't want to give it to you. It was 5 years ago or whatever it is, but sometimes there's important information on there. We have to see how assets were allocated after the divorce. If maybe one of the spouses is on the property that they didn't know about. So there's a lot of those could be deal killers as well, which is why we work up front and work diligently to be able to get all these documents just to make sure we're 100% ready to go. And the TBD approval, it's not a cash offer, but it's very similar to a cash offer. A lot of reason why sellers do like cash offers, because essentially there's no strings attached, right? They're giving you cash, they don't need the bank, they don't need financing, and they close a lot quicker. Now, the next best thing is a TBD approval when you're submitting a loan, because the TBD approval shows that you've been underwritten by the bank and you're approved already. You're ready to go. This is your maximum amount. You could buy up to this amount and anything below. So what's the next best thing to a cash offer? And the next best thing would be, just a regular pre-approval letter. So, we're getting it very, very competitive to compete with all these cash offers that, people have a lot of money right now and buying properties cash. So to be able to compete with them, the TBD approvals are very, very, making us very, very competitive in the market.
Yeah, and one of the number one reasons, Rudy, that deals will close quick or take longer. I'll tell you right now, because remember, we've got people working from home. We've got people being teachers from home. They're now doing everything from home, and now they've turned into a teacher now when they have their full-time job. The number one reason that will allow us to close in sometimes even 17 or 20 days is borrowers getting us information quickly. We have a full support staff that can move the files as quickly as we can, but that important information that buyers can give us, we've even written offers and had pre-approval packages at 17 days. Right? Whatever we need to do, and we give that upfront, conversation, have that conversation with buyers and say, listen, if you can get us things very quickly, we can close as quick as you want. You know what I mean? So the buyer's role in the escrow process is extremely important and will allow you to have not only a smooth transaction, but close quick and stand out above all the rest of the buyers. 20, 30 offers, you've got to find a way to stand out. You know what I mean? So
that is gold nuggets. Now, I'm curious though, Chris and Conrad, how come you guys like doing it just as your standard practice? But if I go to like a normal loan officer, I go to my Bank of America, Wells Fargo, ABC Mortgage Company, every traditional loan officer, like, there's no way, that's insane. Like, don't do that. And they want you to make your offer looks like everybody else, and you wonder why your offer never get accepted. Like, so what's the difference? Like, what's the difference? Like, I'm curious. Like, if I'm a first-time home buyer, I'm like, man, that's weird.
Well, one of the differences is that we are a direct lender. And what a direct lender means is that we have everything in-house, from processing to underwriting to funders to doc drawers, everything is in-house. A lot of mortgage professionals out there, they're what you consider brokers. And what brokers are, they're essentially the middleman, right? They talk to the client, they get all the documentation, then they have to send it to the broker or the actual bank, and all their personnel actually underwrite and processes the file. So you don't necessarily have a lot of control because you're sending the business to this broker and they're handling everything. And in these times during COVID and the influx of refinances that we've had, we found out and heard that a lot of the brokers are actually behind because they're so busy with refinances and other purchases. With us, we're direct. Everyone that we deal with from start to finish is part of our staff and part of Doorway Home Loans. And what that means is we're able to talk to them directly and rearrange our pipeline if needed to move a file that we just got submitted to the top. For whatever reasons, we're able to be able to maneuver that way. And even the TBDs, we do have underwriters in-house that even before the deal is in escrow, we're able to talk to them directly about the file to be able to get the TBDs that we need. So being direct is a big game changer. And being a medium-sized company like we are makes us very nimble. We're able to talk to our employees. We could talk to the CEO. We could talk to the vice president. We could talk to the owner of the company without having to go through hoops to talk to them. So we're able to maneuver faster than most banks.
And what Conrad is describing, Rudy, is, remember, we're a mortgage bank. You said when you walk into Wells Fargo, B of A, Chase, what are they? They don't just do mortgages. We do only mortgages. That's what we specialize in. We have about 156 employees. And what do all those 156 employees do? We work on mortgages. We don't do consumer credit cards. We don't do banking. We don't do, home equity lines of credit. We work on only mortgages. So, we're able to focus on the mortgages themselves. We don't third party send anything out. Everybody working, typically we have a few branches in California. The people working on those loans typically are in California. We're a smaller bank where we're not sending things out to the Midwest or anything like that. You know what I mean? So everybody here works local, and we're all able to work on the loan simultaneously. You know what I mean? When you walk into a Wells Fargo branch, sometimes, I'm not saying all the time, that loan officer that does what we do doesn't always have to be licensed like we do individually. They are covered under the big giant umbrella of the big bank. On top of that, the underwriters, the doc drawers, the funders, they're not in the branch, right? And you go into some of our branches, they're in the branch. So we're able to work and close, quicker because of those certain things, because we're a true mortgage bank, and we're able to close, and work seamlessly because we pick up the phone. We reach out to our personnel, within a matter of minutes, so there's no disconnect, because purchases are extremely important, for there to be no, lag times. Those bigger banks, sometimes they have, the time frames that take a little bit longer. They think we're crazy for what we're going to deliver on, but that's the main difference between walking into Wells Fargo and walking into hypothetically one of our offices. You know what I mean? I tried to set up a new bank account with Chase. I love Chase, but I had to set an appointment just to open up a new business bank account. So, for us, we'll meet you on the weekends. We'll meet you at night, 10, 12 hours a day, whatever we got to do to help the client, essentially purchase their home. That's what we're here for.
Love it. Give us more, some of the ideas and tips to help people to win into this market. What else you got in your back pockets there? What do you see every day, Conrad and Chris? Can you share like real life examples that you help families in, like now, this week? What kind of deals you working on this week?
Yeah, so I'll touch base on a few. Not everybody fits these buckets, but what we've seen is a lot of people pull out of certain programs, Rudy, is, people don't want to do the down payment assistance program sometimes if, they take a little longer. We have some awesome programs in-house that we do not have to send out to another bank, do not have to broker out. We still have those programs. We've seen a lot of other banks pull out of those because, they either take too long or they don't do them in-house. So we have some first-time buyer programs. They do require, a little bit higher credit score. The interest rates are still really good, and we can help with some of that closing costs. A few of the big issues why people can't buy is either the lack of down payment or the credit score, right? And Conrad can touch on the credit scores a little bit, but when it comes to the down payment, we've got some down payment assistance programs where we can still close in 30 days. Back in the day, we used to use a lot of a different type of down payment assistance program. We used to have to ask for 45 days. Now we're closing our down payment assistance in 30 days. We also have some in-house programs, strictly with doorway home loans, where we offer some incentives for working with us. We can help, pay for some closing costs. We've got a lot of first-time buyer programs because the less that the buyer has to pay, if we can help out in any little form or fashion, then it helps that buyer, and then the seller's not worried about something. Same thing happens with VA buyers. There's a common misconception that sellers are going to have to pay for some of the veterans' costs. We pick those up if there's any VA non-allowable. So we're always here to be a helping hand to the borrower. We have all the programs out there to help people as long as they're willing to, meet us in the middle. Conrad, touch a little bit on credit. I know you've had a lot of credit challenge clients, but you've gotten to that next level once they were ready.
Yeah, credit's a big deal. Like Chris was talking about, it's either credit or down payment that are holding people back as far as purchasing a house. We have a very good credit repair team that is able to help clients out, even if they do have low FICO scores. So, I've helped plenty of clients out this last year and this year included, where I've been working with them for 3, 4, 5, 6 months, during the credit repair process. Again, we have a great team. We do some of the smaller stuff in-house, to pay off a credit card, pay off a collection account. If a client does have multiple lates or any collection accounts that are in charge-off status, we do have a great team that we're able to refer them over to work on the credit. Because sometimes we all know they've been through a tough time, or I've been through a tough time. We've all done it where our credit may have gone bad because of bad decisions or bad circumstances that happen. So everybody does deserve a second chance. And some people are trying to get that second chance sooner rather than later. So what they're trying to do is increase their credit scores a lot quicker. Because they want to purchase now, they want to take advantage of the lower rates right now, and when these clients go to Chase, to Bank of America, they're so busy and so big on the big picture. What they do is they turn these clients down, say, hey, your credit's not good enough, sorry, denied. We don't. We say, look, your credit's not good enough to buy right now, but this is the game plan in order for you to purchase in 3 months, 6 months, 9 months, whatever the plan is that we're going to come up with them. So we don't necessarily deny them. We just let them know you're not qualified at this moment. You need to do A, B, C in order to get yourself in the position to be able to purchase in the near future. And we help the clients along the way. We have great referrals, or if they have their own credit repair company that they know or friends, we encourage that as well, but we have the resources to be able to assist with the credit. Something else that our bank is great at is we don't have many overlays. And what overlays are is additional safety nets that mortgage banks put on in order to be conservative. So like one, for example, is our debt to income ratio. We underwrite to the Fannie Mae and Freddie Mac guidelines, whatever those guidelines are at the time. There's no additional overlay. So some banks out there, they do an additional overlay, which is being a little more conservative. Let's say a debt to income ratio for Fannie Mae or Freddie Mac on a certain loan product is 45%. There's some banks out there that would only accept up to a 37% or a 35%. And what the debt to income ratio is the percentage of your gross monthly income compared to your mortgage and your debt payment. So there's a certain percentage that you're able to qualify for. And we don't have any additional overlays. We're obviously want people to purchase houses and get into homes. So we go by the guidelines. We don't do any additional safety nets in order to bring people's qualification down. Because right now in this market, again, especially in Southern California and all surrounding areas, the market's hot, from going from, a $500,000 house to 520, being able to approve for additional 20,000 is huge, huge, huge in this market, just because, values, there's people competing for a lot of houses. So that house prices are going up. They're usually selling for more than listing price. So being able to max out your debt to income ratio, if the buyer's comfortable with doing so, we're able to do that. Because a lot of times, we give a certain maxed out budget for a buyer and they want to be conservative themselves. At least they know they could buy 550,000, 600,000, but they want their payment to be lower. So they're buying below their max, but at least they know what they're able to purchase in case they do find that perfect house. Because a lot of times, me included, I'm willing to pay a little more extra a month if I find the perfect house. The house that hits all the check boxes that I like, I'm willing to pay an extra $100, $200, $300 a month if it does hit all the check boxes that I like or that I want in a house. So, that's an additional aspect that, us as Doorway are able to provide to clients to be able to qualify for more. Because again, very, very competitive right now in this market.
And two things to touch on in addition to that. Obviously, we know it being a seller's market, rates are still great. That's the buyer's market side of things. The seller's market, because you're getting 20, 30 offers on a property, demand is so high. A lot of times buyers will come to Conrad, myself, our team of loan officers, and say, listen, I've got X amount of dollar amount to buy, and here's what I want to pay for a mortgage. And sometimes we've found that lenders say, okay, perfect, you've got $40,000 to buy and you want to pay X amount of, $3,000 for a mortgage. Now, when you think outside of the box, sometimes utilizing that $40,000 maybe to pay off some revolving debt or pay off some other debt so they don't have these other monthly expenses to then increase their mortgage payment, because at the end of the day, they were still saving net money because now they don't have those debt or that car payment. Our job is to educate our client. Perfect. Here's the numbers we have at hand. Here's what helps you to get the best buying power, right? Because we know that sometimes clients need to go from 510 to 520 to 530. So we want to be strategic and say, okay, what can we do to put you in a great position that you could still afford the house, but utilize your funds accordingly that best, give you that advantage. You know what I mean? If you have all these credit card debts or a car payment and you're paying all that off and you have a $500,000 house, what if you paid off this other debt and went to 520? Remember, your mortgage interest is a write-off. There's not many things that are a write-off on your taxes. The other thing that Conrad touched on is credit. Perfect example. I have a client by the name of Jimmy. He is an elderly man, VA client looking to obtain financing. Conrad and I went over his credit. Gentleman had a mortgage late within most recent 12 months. Spoke to him about this scenario, went over his credit, and we knew that we had some type of leverage with this gentleman. And it's unfortunate that 1 month of mortgage late was prohibiting him from getting the next financing. So Conrad and I kind of went over the credit. We got on the phone with one of the creditors and the borrower. We told them the scenario. The gentleman's wife has just passed away. And what did we do? We were able to get his 30-day mortgage laid off because there was extenuating circumstances. and this gentleman is now able to obtain financing. Now, that doesn't happen with every client, but a lot of times what people don't know, consumers don't know, that there are loopholes. There are things that you can do to increase your credit scores, and they just don't know these common practices. So we're here as educators to educate people not only in buying a house, but educating them in the credit profile, what gets their credit to the next level. There's a lot of tools out there. Some of them cost stuff, and some of them don't cost anything. It's just educating the client how to get them to that next level, to get them that higher purchasing power and putting them in a better position overall, not just for the house. If we can get them in a better position in life, to buy that next car, to get a lower interest rate, or credit cards at a lower interest rate, we're putting them in a better trajectory to succeed in life, not just about house and real estate. So
That's awesome. Lots of gold nuggets. Now, to wrap up the day, Chris and Conrad, is there anything else? If you're speaking to our VIP clients right now and to our agents here at your home sale guaranteed realty, what would you say as a matter of best practice to win when buying a home in today's market?
Right now, what we're doing as the More Group, we do have a promotion going in for the month of March. So anyone that is purchasing a house in the month of March, you are eligible for an appraisal credit. So what we're doing is our company is covering the appraisal for the buyers, especially first-time home buyers. So that is an incentive that we have going on in March. So anybody out there that's a first-time home buyer, appraisals do go anywhere from $500,000 to $650,000. So we do have that going on, that credit going on for the month of March. Besides that, it's having a good relationship with your lender. As a realtor, as a buyer, and as a lender, having a good relationship and having that open pathway or highway of communication is huge, because we want to know all the ins and outs. Even if it's bad information, we want to know now. We don't want to know when it's an escrow. We want to know now, so we could game plan and kind of figure stuff out on how to get you in a better situation. Because there's a lot of lenders out there promoting, we do 550 FICO scores, 580 FICO scores. We could do that as well, but the thing with what comes with those lower FICO scores is a higher interest rate. So if we're able to get a client up 20, 40, 60 points within a matter of 2 to 3 weeks to get them a lower interest rate, that's something that's pretty huge. We're getting them into a better situation. With a lower interest rate, they're able to qualify for more. So those are just a few tips that we're able to do to help you get your offer accepted and help you get you into the house that you want.
a few other things as well. One, exactly like Conrad said, have a great relationship with the lender, right? There's a lot of great lenders out there. Maybe you found that Wells Fargo, that Bank of America rep, that Chase rep, that's great. Create a relationship with them. Call them after hours. Make sure they respond quickly, because time is of the essence right now. You know, it's very, very important. A lot of times when offers go out, the buyer's agent then calls us and say, hey, can you reply to that email? You're in the email. Or can you give them a call right now? Just put a good word in. Leave an impact on the listing agent. They are getting so many offers that you're going to get lost in the shuffle. Leave an impact. What a lot of times Conrad and I will do, we will send the listing agent a bomb. A lot of people don't know what bomb is. It's an awesome platform to set a video email or a video text directly to the listing agent to leave an impact. Maybe they don't remember who I was or whatever it may be, but they remember something about it, and I'm going to be able to leave that impact, and they're going to think of me when they're thinking of accepting an offer. The other thing is, buyer's agents, ask yourself, how am I making my buyer stand out? If you're not having them stand out with some form or some aspect or something in your offer, all you are is paper to the seller, and you're not going to stand out above amongst 20, 30 people. Just like you said, your VIP clients, Rudy, you're having them stand out with the tools that you put in place. Ask yourself, is this client stand out among 30 other buyers? If they don't, change something in that contract. Talk to the buyer, talk to the lender. Listen, lender, what do I have to do to make this buyer stand out? Because if not, you're going to be shopping for 6-9 months, and time is money. Time is greater than money. So the longer it takes for someone to buy a house, the more money you're spending. So make your client stand out in some form of fashion. Think outside of the box so the seller remembers you and your client.
That is a great advice, right? There's multiple offers. You gotta stand out. Otherwise, why should I accept your offers over and above 15, 20 other offers? Who do you think you are, right? And everybody has more money. So so here at your home sale guaranteed realty, for our VIP buyers clients, we put together the ultimate offer package, exactly what you say, Chris. So we stand out. And then the fact that you guys are willing to call and communicate to the other side, man, there you are selling the buyer. So that's powerful. Now let's end the session by, we should have done it at the beginning. Your introduction, who you are, like your name, how long have you been in business, and how many families have you helped? And last but not least, how do I contact you, right? So all the people watching this, a lot of our clients, agents, we put it up on the Facebook now. So how can they, who is Conrad Alvera? Who is Chris.moreno? How do I contact you guys?
Go for it, Conrad.
Hi, my name is Conrad Olvera. I've been in the industry for 6 years. I am part of the MORE group. I am a mortgage loan officer. Last year, I did help 99 families either refinance or purchase a house. So helped a lot of families out. Last year, my goal this year is to help out 120 families, whether it's purchase or refinance. So we're definitely here to help. We'll do whatever we can to help people get into a house and get into a lower rate, especially right now with the rates being so low. You could reach me at 626-716-6841. That is my cell phone number, or you could reach me via email at Conrad, CONRAD, at moregrouplending.com.
Awesome. And I am Chris.moreno, also work with Conrad, part of the MORE group and Doorway Home Loans. We do have some loan officers that focus in different geographic locations. So feel free to reach out to any one of us. Been doing this about 12 years. Conrad did beat me by 8 loans last year. So I did close 91 over the course of my 12 years, probably closed, over 700, 800, 900 clients, helping them get the financing. For Conrad and I and our team and Doorway Home Loans, we just want to help more people. So feel free to look us up on Instagram, social media. We have the MORE group, that's MORE, the MORE group, Doorway Home Loans. But feel free to reach out to us in any form or fashion. You can Google search, the MORE group, and we should pop up. We do have some people that can help out in different geographic locations, but we're here to support, bring value not only to realtors, but bring value to consumers as well, and educate them in the not just the home buying experience, but also refinancing. So anything we could be of value, we're here for.
Yeah, you manage you manage a branch location. What about language, Chris and Conrad? We have people in different language. What language you and your team speak?
We do cover English, Spanish, Mandarin, and Pig Latin for those. No, I'm just kidding, no Pig Latin, but English, Spanish, and Mandarin. We do cover those languages.
Awesome. That's it, you guys. A quick conversation. Put it on the chat. Say thank you to Conrad and Chris for helping with a lot of gold nuggets to help you to win. Okay, Chris and Conrad, I know you guys are busy. So thank you, and I'll see you guys tomorrow.
See you tomorrow.